Karin Kimbrough, it's been a rough 2 months for stocks, but things seem to have stabilized since the start of September. So is it smooth sailing from here on out?
That's right. It has stabilized a little bit. We've seen so far something like a 10% correction with a little bit of improvement since then. But I think what we're expecting is you could have more air pockets going ahead. So could there be another 5 or 10%? Nobody really knows that's possible. But that said, we're looking at this really as a cyclical bear market amidst a longer secular bull market. So there should be improvement going ahead as we see the U.S. growth improve next year.
And do you think things will get better once the Fed finally makes a decision? Will the Fed's indecision continue to weigh on the markets?
You know, Greg, I don't look at it in terms of indecision. I really think of it as the Fed assessed everything, and although the economic data probably suggested that they could indeed raise rates, that the economy could sustain a 25 basis point hike, they looked at the risks from abroad, the uncertainty, and the possible blowback that it could have on the U.S. economy and decided just to delay a little bit. So our economist, Ethan Harris, is looking at it like a tactical delay, and the call now is for a December liftoff.
All right, let's talk about the risks from abroad. China was volatile this summer. It sent our VIX over 40. So has China smoothed out its problems that'll help ameliorate things over here?
You know, China is facing some problems, and I think they have a little bit more work to do. This is a big secular trend they're doing. They're trying to transition their economy from being export-oriented to domestic demand-oriented, and that's going to take a long time. And they've got a lot of aspects of their market and their economy that they're trying to manage at that time. So I think it's going to be, looking ahead, more volatility for all of us as the U.S. ultimately decides to continue to grow, and we'll see rates come up. At the same time, China is trying to manage a slowdown in a smooth way. So I think there's more volatility ahead.
And we hear rumblings on the campaign trail about the threat of a government shutdown. People don't think it's going to happen, but I guess it is a possibility. What are you hearing? Is that a possible threat?
So the way we look at it at Bank of America Merrill Lynch is that it is a possibility, but it's not our base case. We do think that on the whole, it's likely to create a lot of headline risk as we get closer and closer to those deadlines. But on the whole, there should be a solution that gets worked out.
Meanwhile, we haven't heard a lot of geopolitical risk in the market, whether it be Ukraine or Syria. Are you keeping this in the back burner? How do you bring this into your overall strategy?
Sure. So my focus is mainly markets and macro from an economist perspective. So I typically tend to look at things in terms of how they're going to affect growth, how they affect confidence, and financial contagion. And at the moment, you know, we're really looking at the world in terms of a much better path for the U.S., a continuing improvement for Europe and hopefully Japan. And of course, the emerging markets and developed economies are going to face some headwinds in a higher rate environment and potentially slower global growth by a little bit. But overall, you're balancing those two factors. So I don't think we see any imminent tail risks on the horizon. We just are watching China carefully.
All right, and then finally, if you were to give me a win-place show to rank the best places to invest in the world right now, so domestic, emerging markets, and then Europe and Japan, how would you rank them?
Well, we're still constructive on the U.S. I mean, admittedly, we're in a bit of a pullback right now, so we like the U.S. We have faith in the ECB's Draghi's ability to ultimately achieve his objectives with QE, so we like European equities as well. And we think that in Japan, they're going to continue to create their scope for accommodation, and I think that ultimately we like all three of the advanced economies over emerging markets.
All right, there's your Win Place show. Thanks a lot, Karin Kimbrough.
My pleasure. Thank you.
And thank you for watching The Street.